Good evening. This is Saturday, September 9th, and just wanted to make not a short video. I guess this is going to be kind of a long video because I wanted to explain my strategy, how do I like what I look at, how I look at the longer time frame charts, and then come down to a smaller time frame. So this one I just wanted to show you on a longer time frame, like a monthly, weekly and daily. So that's the time frames that I'll be showing you, so it will be easy to view. And I trade on like mostly I look at the 60 minutes, like a 1 hour candlestick, and then I go down to 15 minutes and then 5 minutes. And I like to trade on a 1 minute time frame. So most important thing is I pay more focus on the time, right? Because when you look at the chart, you can see there's the time axis at the bottom and the price is on the top, right? Y-axis. So if you're studying price analysis, the main thing what I look at is only the time. Depends on what time you are looking at and then trading it. Because if you're going to just trade looking at the price, it doesn't make sense to me, because everything is dependent on time. Like just for example, like if you wake up, you follow the daily time, right? You wake up, get ready, have your breakfast, go to work, and you'll have breaks and whatever, and then after work you come back home, and then in the evening you do whatever you want, and then at the night you sleep. So that's like an algorithm, right? A human being, normal human being will do this one. It's like a daily procedure. So if you look at it, a person, like you can easily predict. It's say it will be difficult to predict a single person, right? But if you can predict a crowd very easily. So when you're looking at charts, you can see there's people trading it, right? And then it's easy to predict crowd behavior. That's what I think, and I follow it. Because example, like if there is some strike going on, right, and you'll see people, they'll be just shouting or whatever, because everyone's mindset is the same, and they're just following like a herd mentality. And anything goes wrong, like fight breaks or something happens, because that's a herd mentality, and everyone will start fighting. If it's like a peaceful demonstration, all the people are demonstrating like peacefully. That's a herd mentality. So it's easy to predict like a crowd or a group of people, and it's a kind of little difficult to predict an individual person. That's like my thinking, and I wanted to just show you like how I trade, and hopefully you can see what I'm thinking while trading, or if it is actually what you call applicable. You can use some of it, not all. Maybe you can just take small pieces and add it to your trading. So let me go to, this is a daily Nasdaq chart, and what had happened is like this is this week's trading. So this part of the portion is this week's trading, and you can see this one. So what I was looking at is this gap right here. You can see this red candlestick. You can see what happened is there was higher high right here, and then it came down. It didn't go higher high, right? So this was higher low, and then it broke over here. So once it broke this, I consider it as market structure shift. So it's the market structure shift to the lower side, downside. And when so this is the bearish candle that I'm looking at, the green one, and then you can see the gap at this is the red candle. What day is it? August 2nd, August 1st, 2nd and 3rd, right? So I'm looking at the August 1st candlestick, the low of that, and then the high of the August 3rd candlestick. And then I'll just try to just a rough diagram. So over here you can see is this is on a daily. You can see that's a daily time frame, right? So for me this is a nice higher time frame that I'm looking at. So this is a daily time frame. The next day you can see the candle. Okay, 1 second. Okay, so you can see the next day the it went inside, right? And then I'll go short from here. Oops, that's color. So this is the gap. And then the next day, this candlestick, you see the wick, it it went inside and then it started going down, right? So I would have got short right here, but then this is all the way down, right? Now it's come up here. So this was for this week, and my trading was based on this area where it got in the candlestick. You can see it came in right here, and that was Friday, I guess. And then I want, by looking at this, like there is kind of resistance, you can see this one, and then I was expecting the market to go down. You can see this is your gap right here, so I'm expecting it to fill in the gap because there was only upside trade. The market was just delivered to the upside, and then I try to see this gap and let for the week, that was for the past week, right? I was thinking that I'll be trading in this area. So let me show you a top down approach that I look for starting from the monthly. This is daily. Let's go weekly. That's the weekly chart. And since last week was the start of September, as the new month starts, then I try to look at the chart in a monthly bias, and it will. So before starting, I'll just show you what I am looking for. Like how do I get my daily bias, right? Not daily bias or weekly bias, whatever it is. So say this is the Nasdaq futures, right? It is a monthly. So each candlestick is monthly, right? Let me get it. Okay. So say for this the whole year it went up, and then from January 2022 it started coming down, right? So over here you can see this was like a low in October. This was September, the red candlestick, and then the green one is October, right? And then November, you can see it was a higher high in November. So then, okay, and then December also it didn't break the lows of October. So now when the month starts, right? So what I'll be looking at is it can go down, right? If it's going down, it's going to fill in this gap you can see on the left hand side, right? This was there's a gap from this one to this one right here. Oh, that's already it came, so maybe let's see. I think unit it. Yeah, it can come down, but like when I look at the market structure, right, it's like a higher high and higher low formed over here, right? So most probably the market structure have changed. So then I'm looking for a upside movement over here. So which will be a better place like for the next month? How would I trade? So the bias would be like since it's a higher low, the market will try to go up, right? And then the liquidity, you can see these two candle tops, right? It's like even, so there is a lot of liquidity right here. So that will be my, I'll be looking for it as a first target, right? So this one for the month of, this is December for January. So if my bias is that the market is going to go up, then I want, you can see the December candlestick closed quite at the bottom, right? So I'm expecting it to go on top and get the liquidity for these 2 months. So you can, the next month is, here you go. So you can see it came back over here and that was kind of resistance, right? But it, you can see it came all the way from the bottom, right? This was closed, December closed at the bottom, and then January started little high. It came low, but it still didn't break this candlestick. So it's still kind of still thinking of going up. So this, you can see this three. That's a kind of lot of liquidity right here. So January close, it went all the way high, took the liquidity and came little down and closed, right? So the next liquidity that I'll be looking at is, you can see this candlestick on top. You can see that that's almost close to this equal highs over here. That's the month of August, July, June. You can see the June also. You can see the wick. It came all the way on top where all these three. You can see all these four. 1, 2, 3, 4, and then this wick is also almost over there, right? So there is a lot of liquidity right there. So let me draw. So from here you can see that's all liquidity. All this is. So for this is January, right? And you can see it closed all the way on top. So for February, I would expect it to take these three liquidities, right? So that's for a whole month. So there's going to be a lot of trading, like 4 weeks of trading and daily, like 30 days or 21 days, whatever it is, right? So in those days, this is what is forming, right? I like to take a look at the candlestick body, and then let's see what happens the next month. The next month you can see what happened is it went and took this liquidity. Okay. Yep. You can see it took this liquidity month of February. It opened, was a little down, came just a tad down, and then it went all the way up. You can see the red bar. Yep. So, but it was not able to go to this liquidity area, right? The order flow is bullish, but yep. Here you go. So it took this 3 months liquidity, and then you can see there's like 4 months: May, June, July, August, September. That's a real good area of liquidity, but like you can see the order flow is bullish. So I would think, yeah, it will be done by next month. Like February came, took this 3 months liquidity, right? Went up and came back and closed right here. It didn't go all the way down or anything. So the next month, that's a nice bullish month. But look at this liquidity. All this liquidity was almost. This is a month of March. So you can see what happened after February is it closed right here, and then it you can see the wick at the bottom. So it dipped into this candlestick, the green one, right? It didn't go all the way down, just half. That is really a bullish sign. It just came half the way. And this red candle is like a bullish candlestick for me. So you can see it didn't penetrate all the way down. It just came half the way. That's a nice uh, candlestick because it came down and then again it went and it started going up and it closed all the way high over here. So this is still a bullish order flow going on. So next April it should May almost took sorry March almost took this liquidity, right? And then we are looking at these tops now for the next month. That will be, so this is all monthly time frame that we are looking at. Okay, April. What did April do? It, it's still in this range, right? But look at it, it's still kind of bullish. It's above. The wick is like the lows of April was nowhere close to the bottom side of March. It was all the way half of this candlestick. It was just trading upside, right? So that is a bullish sign. But you can see it was really, it's kind of, I'll show you the other thing, right? This is like a expansion, this is a reversal down, and then again expansion, and this can be consolidation. It's just going sideways or just a small range, right? So that's kind of it consolidated, and then let's see what it did in, and I'm still bullish. You can see this candles, it's really bullish, right? So after May comes April. Oh, sorry. After sorry, March, April comes May. Yep. And in May, it took this liquidity. Wow, it took the liquidity and it's still bullish. So this was all sell side over here, right? It's going down, right? And then now this is the buy side. So for the buy side, like I'll be looking for the bullish order flow. You can see the for the whole month, that's all green candles. It's really nice and bullish order flow. So after taking this liquidity, now if I still think the market is going to go up or down, what I'll be looking at is if how is it valued, right? Is it expensive or is it cheap? So if it is going to be cheap, then I'll still try to go higher. And if it's expensive, then I'll be looking at the order flow and then looking if it's going to go down back, right? So what I look at is like the top of this move from here all the way to the bottom, right? And where is the center? It should be somewhere right here. So let's see, I'll use Fibonacci tool. So let's go from the all the way high to the bottom. So you can see this is 50% right here. So that's your 50%. So the top is 50, bottom is 50, so that's 100, right? So I am looking at this line, right? So you can see this is, if you take it straight, right? So the market now, right now, and in May, right? It is at fair value. It is not expensive. It is not at a discount. If it's at like when you look at this portion right here, so this is like 25% all the way down, right? So this is like a deep discount under this, under over here. So when it came down here, right, the smart money and the banks, they are looking at this and they're saying, okay, now it's cheap. So what they do is they buy here, and then as they go up, they'll sell it because it's expensive. So they'll sell it at the top. And the same way they'll sell at the top right here, sell at the top, come down and start reloading it when it's coming down. So I just wanted to show you, right, this is like the range I'm looking at. This is the 50%. So right here the market is not cheap, no, it's is not at discount, and it's not at premium, right? So, and the order flow is bullish. So here I'll be kind of careful doing like trading, right? And let me remove this. So now it's kind of almost, it's going to get in the premium area, right? Expensive area. So where is the next liquidity that I'll be looking for the market to go is, you can see this one, two, three highs, right? This is the area. Most probably, let me see. Most probably I'll be looking at this, the body, right? This is the body area. Where is the most? Probably I'm looking at this one, and also the wicks. I'll be looking at the wicks also. But when you see this green doji, right? That's a doji, and then this is a down month, and this is red. So you can see there is a gap here. So that's where I'm looking at actually, the gap, the bottom of this candlestick and the top of the candlestick right here. So this is now it's going in a lot of premium, right? So most of the time what they do is the smart money, they will, once they load up their uh, over here orders, right? As they're going up, they'll try to distribute it, right? So over here is the most they will try to distribute because it is really expensive. And like a retail trader, what they'll be looking at, like how I should trade, because I know like how I should trade before, right? So once if this is going up, right, then I am sure, oh, the market is going up, and then the retail is going to start buying here because they're thinking, oh, there is a nice move up, right? And from here you can see this is the top, so that's kind of resistance, and they're thinking, oh, since the move is really strong, once it starts breaking up or from here, right, they'll start buying it. And that's where the smart money, they know how the retail trades, and they're dumping their positions right here. So let's get, and this one actually I'm looking at is a bearish candlestick. So from here I would be really cautious right now. Say which month is this? May. I'm looking, June I'll be looking for it to go up June, right? But this is like a monthly. It's going to take a long time. It's not going to be easy. But what I'll be looking at is you can see this candlestick. That's my strategy. This is the oops, forget it. You can see just take a look at this green candlestick right here, right? What happened is it opened here and then it came all the way down and then it went up. This is the low of the bullish candlestick. Then it goes up all the way high and then comes down again and close near the top. So that's how I look at, like, if I'm looking at a day or a week or something, I'm trying to look at the candlestick to form in this way. So let's go ahead now. Okay, so this was May. So let's May, June. What happened in June? Yep, that was a nice, still strong and bullish, right? Green candlestick. It opened and just started going up. May was just going up, no stopping. So for May, you see, came right there like a resistance, but it traded in there. That's the bodies over here. And then May closed here, right? So May, June, I am looking for this gap, right? Okay, that's the gap over here. So this is monthly time frame. This is a really strong resistance or support that I'm drawing over here. Okay, so let's see what happened the next month. Yes, that's nice and strong. So liquidity was taken here. You can see this candlestick also how it formed. It opened right here, came down to a discount. So it's coming to a discount. There's the smart money. They take the market to the discount over here and then go back all the way high, right? So that's the same thing that they're applying, like over here they're coming discount. And let me go over here. I don't want to get on to another topic. So here you can see it took this liquidity. That's a really nice one. Took this liquidity, but now it is really expensive. The and this is all green, right? You can see green, green, green. Smart money is already dumping their positions over here, over here, over here, over here. They're almost done dumping. And like retail traders and all are looking, oh wow, this is a really strong move up, right? This is a monthly move and it's strong. So you can apply it to any monthly, daily, weekly, right? If you see like this green candlestick forming, everybody is thinking it's really bullish, right? And then this one, it can, I'm not saying that it can't go above this level, right? Let's see. Okay, so let me. Okay. So the next level, if it is bullish, but it's too expensive right now, so I'll be waiting for some kind of thing to at least even if it moves up, right? It's okay. Then I'll be looking at when it comes to this resistance. But right now, this is a monthly resistance, and this is the last step to go to the all-time high, right? And it's not going to be that difficult. So now over here, if I had traded all these months, right, now I would be waiting here patiently to see what happens. So the monthly candle it closed up, right? So for July, August, it's going to open right here, and then let's see if it's going to take this liquidity. This is like a resistance area, right? August, wow, that was bad. There you go. That's a resistance was here resistance, and you can see the month. It came all the way down. It even got the lows for the month of July. So that's like a shows that it's not a strong or a bullish order flow, right? It came, it broke this low, right? And then you can see it almost came in June. It broke the 50% of June's also candlestick, right? It came all the way down. So this kind of looks like the August was, and this is like they call hammer. Hammer on top is not good. That's what retails thing, because I used to look at that too. So that was where I was in August, and then for September, what I was looking was actually for this August month. You can see there is a gap up, right? You can see this the down wick and the top wick over here. Okay, let me draw it with a trend line. So you can see the bottom of this wick. Yep, get that, and then the top of this wick. So that's a gap that I was looking for if I was trading August, right? So I would look for this to be filled, and it did, right? We can see it really nicely filled, but it went up and closed high, right? For August. So let's see, and now September has started. So it's just the first week of September. Here you go. That's just 1 week. It has to still like 3 weeks to form the monthly candle. So now this was a higher time frame that I was looking at. This is really strong resistance if you're going like you're looking at, right? But let's go to a weekly. Then I go to the weekly. Okay, so for the weekly, you can see I try to do it really fast. Candlestick, looking at the gaps. You can see this gap right here. This was a bearish and then it came down, right? So I'm looking at this gap on a weekly. This at the bottom and then the wick on the top. Okay, so the yellow one is like monthly, and then the red one will be the weekly, right? So there was, this is really fast for the weekly. Okay, this gap, right? You can see this and this one, the gap right here. This kind of stuff. Okay, that's it. You can see this gap right here. Okay, so this is the weekly, and Okay, okay, let me move faster, right? So the red ones are the weekly ones, and the yellow one is like the monthly. The monthly are the stronger, and the weekly are also stronger because it represents like a week, right? So then we go into daily. So the weekly represents like in my when I do my strategy, that's going to be like one hour chart. Then the weekly will be as good as 15 minutes, and then the daily is like the 5 minutes, just like a fractal time frame that I'm showing. So now I'm going into a daily. So this is okay. So I want to show you like this like most of the time when I'm showing you a candlestick, right? I'll show you like on this side, right? Like the weekly, you can see what happened is this candlestick just came half the way inside, and then you can see it started selling off, right? And then you might wonder, oh, why sometimes like it happens that way, right? Just over here, like what happened is this, it filled in just a little bit and then came down. Means it's sold off. It didn't completely fill the gap. Over here also you can see this small little, this is a weekly, right? But now I'm showing you on a daily candlestick. Sorry. Let's see. Okay. So you can see over here. So these are the weekly gap, right? So you can see this candle stick came inside and then it sold off, right? Over here you can see it came down, then it entered over here this place, and then it sold off. Over here also this is the weekly I was looking at, but then when you look at like you'll trade it in a lower time frame, right? So this is the daily. When it came inside over here, it didn't go all the way to the other side, it didn't even go half the way upside, right? As soon as it came, it started selling off. So this side you can see it just goes little bit and then starts selling off, right? That's because what I'm looking at is this side is say like the sell side, right? So when it is on the sell side, it's respecting the gap. Let me take this. So this is all the sell side, right? So it's respecting the gap. When the gap is formed, it's over here also. See, like this one, it's going to respect the gap. It came down, just wicked in, sold off. It came back over here, respected this gap, sold off. But during this time, came up, this the gap, sold off, and then it went up, sold off over here. That's the monthly. Then again it went up. It's looking at still it's on the sell side, right? Look at this area. It comes in right in between, sells off. This is a weekly area and also a monthly in over here. This is a daily candlestick, goes in there, sells off. So it it's like the narration that you're looking at, right? Why it feels that like it's just over here, like on the left side, it's going to respect the gap, and then this is all the sell side. Once it goes to the buy side over here, so once it's on the buy side, it's not going to respect the gaps from the sell side. So it's going to be a bullish order flow over here. So what I'm looking at is you can see this one. That's a low, higher high, higher low, higher high, sorry, higher low, higher high, higher low. So this is a bullish order flow going on. So this side, it's not going to respect the gap. What it's going to do is it's just going to pass through, right? You can see this. This is a monthly resistance area, right? That we are looking at. It's a longer time frame. What did it do? In one day, it just went through it like a knife through the butter. Then it came in this resistance area, right? What it's doing is it's like it's not a bearish thing. It's they're accumulating their positions over here in this weekly. This from this side, right? You can see that was it's not like over here how it's respected. Over here, it's accumulating its positions, breaks out, right? Touches back. Look at this. One day, it just zoomed out of it. So it's not going to respect the value area. Sorry, the gap from this the left hand side because this was all the sell side. Now it's in totally different market right now. It's in the buy. It's in a positive like a bullish order flow area. So it's just going to disrespect the gaps. It's just going to go through it. But let me show you how it's going to form. So let's take a look at this. So here you can see what happened is there was change in the market structure right over here when it passed from here. But when starting, if you see it's lower, this was the low, right? And then it went high, lower high, higher high. So you can see over here it had like three times resistance, 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 right? So people are looking at it like a retail trader, right? They know this is an resistance. The market is still going to fall down, right? Then it starts going down, but it went down to a point, but then it didn't break this side is low. So now I'm looking at it as a positive order flow, and this is like a buy side that I'm been looking for, right? This is all hindsight. Okay, so now you can see what happened is from here it started coming up. Okay, so you can see resistance. It went over here, right? Resistance came back, came back. Now this is retail. When it comes here, they know it's not going to. It's like a resistance. It's going to come down back, right? But when we look at it, like I am looking at it, so this side now becomes the buy side. Okay, let me. So say like this was a sell side, right? Now it's in a buy side, right? So here you can see it came down. Oops, that's too thick. Okay. Now it's going up. So once it came here, it just went up. It took all this liquidity. This is a real strong liquidity because it's like a monthly resistance, right? It took the liquidity and then it just went in this area. That's the weekly. This was the monthly resistance, and this is a weekly one, right? So now, since the market went all the way, took the liquidity, right? It's not resist like we are looking at this, and if you are thinking it's resistance, it's not. What the smart money is doing is it's engineering liquidity right here. So this is it took the liquidity, right? It came till here. Now it's not going to just run straight, start breaking all these highs and going up, right? It's engineering liquidity. What it does is now it is taking this one was external liquidity. This is old highs right over here. So that's this side is all old old highs and all. So this is external liquidity, right? It took the external liquidity right here, and now they are engineering internal liquidity. So the market, they'll get it down. They're loading on their positions, right? So this is they're engineering liquidity over here. So they're getting buying over here because actually I wanted to show you. It's okay now. They're buying, right? So they're taking the liquidity right here. They are engineering the liquidity, and then they go in the weekly resistance area right over here, accumulating, took out like one day, just took out. Let's see this side so it will be clear. Okay, that's good. Okay, so once, so this one, it took this liquidity right here. Okay, it's too thick, and then it went up here, took the internal liquidity, came up. This is the weekly. There's weekly accumulated their positions, and then they are going to go for this high. This is old high, this is also old high. So now they are accumulating their positions, and then they take the high right here. This one, you can see this is liquidity right here. They took it in just one candlestick, one day. They took all that liquidity, and you can see what happened is it took the liquidity and then went up, engineering liquidity, came down. See how it's respecting this weekly gap, right? It's not coming inside, it's just finding support over there. Engineered the liquidity right here, and this is the weekly. You can see at the bottom right here. That's you can see there's liquidity right there. There's a lot of highs right here. It took the liquidity. Yep, took the liquidity, went up, took the liquidity. This is monthly. It's really strong liquidity area. It went down to that one. Okay, I don't know if you can see it clear now. It's going to be really small. So it took this liquidity. This was the monthly gap. It went there, and then what I was looking for is it's no most probably it's not going to go above this high. That's what I was thinking, because this is a lot of resistance right here, and it's in a premium. It's very expensive. So once, and over here they're already dumped their positions, smart money, and then now here they'll start accumulating to go to the sell side. So that's how I look at the market. So what happened is when it came over here, you can see on my Nasdaq, I'll show the chart now. When it came there, I was looking at this resistance. This is a strong resistance area, right? And then you can see, like I was looking at the market structure shift over here at this point. Let me remove all. Okay. Let me erase it actually. Yeah. So this is like a month that I was looking for the market structure shifted over here when it broke this part. Let's see. Yep. This is where I was looking for resistance and the market to go down for the last week. And see, there is a gap too over here. If you can see, so you can see this candlestick right here. The top, I put this trend line right, and at the top of this candle, sorry, bottom of this wick is, oh, here you go. So this is a gap, you can see right, and then it last week it came in this area, and then I wanted to do my forward testing, and I said that the market will go down. So let me get the chart that I was looking, and I had annotated for the week. Hopefully you can see this little clearly. So this is a 1 hour chart that I'm looking at. You can see here 1 hour, and then that was, you can see this is the resistance, the one I just shown you on the previous chart. So here comes the resistance. I'm looking for it, and this red rectangle, right? I'm looking at this high and this low. So that's where I don't want the market to break and go above. So if it breaks above and goes, then it's going to make another high. But there's a resistance. So this was what I was looking, and then I was basing my trade on the downside. So I know it will come over here. It's not going to cross, so there will be the stop, right? And then the market is going to, I'm looking, and then I did, this is what I annotated on, which day is this? Fourth, I think so. Yeah, fourth and almost fifth, I think so. So this is the annotations that I did on that day. So that was Sunday, and then Monday was a holiday in US. The futures still trade, but they don't trade that heavily. So it's kind of a slow day. So I was looking for the market to go down. So these are the levels that I annotated, and I will be looking for the markets. So this is the sell side. From here you can see this two, there's are equal lows, right? So there's a lot of liquidity right here, and I'm expecting my first target, like say it's going to take this sell side, and the second, there's the first sell side right over here. I am looking to be taken if the market is going to go down, right? And like after doing the analysis and looking at the chart, right, I've come to the conclusion it's going to go down. It can go up, it doesn't matter, but now I'm going to trade to the downside. And then this, you can see this is a liquidity area over here. So when the market starts going up, right, what happens is they're buying. You can see this, they're buying, right? So where is the stop loss going to be? They're going to put it right here. So that's why it becomes a liquidity area. And then it goes up, comes down, right? And so they're thinking, oh, this is a pullback. Let me, yeah, okay. So let me just do from here. So you can see this was a real move, good move high, right? Mm, look at this move. When this move went all the way up, so even if the retailers, what they'll do is they'll put their stop loss right here. This is a pullback. Again, move nice up, right? Some of them will, like their profit they took, they might take profit, or the stop loss will be here. So that's why it's a liquidity area. Liquidity area. They go up. Now this is like area. They're looking going up and down, right? Consolidation. What happens? It breaks down. Liquidity area goes up. So like everyone is I don't know to explain all that now right now. So let me show you what I was looking at. Okay, so that's the first liquidity area. I was looking second liquidity area, and then you can see this is the gap where the market can still come down, right? This is another liquidity area, another liquidity area. So that was the annotations that I did. So I am thinking of, see, I'm not sure if you can see this area. Give me 1 second. Okay. So it came down, and then this is Sunday. So the Sunday opened, and then I look for Sunday like Monday and Tuesday to form the highs of the candle, right? So maybe this is like the candle. This is still Sunday, right? Monday, and maybe Tuesday might come again till. But then I don't want this to break, right? So it will come up and then start going down. So Sunday open. So this is what I'm looking for. This is the open of the candle, right? And then this is the wick. The Monday and Tuesday forms the wick, Sunday, Monday, Tuesday, right? And then I'm expecting the candle to go down. So if I'm expecting it to come here, or all the way to fill this gap, right, by the end of the week. So I'm thinking this is the body of the candle. And then I'm expecting the wick, like by Thursday or Friday, the market to go down and then come back up here and close here. So that's why the wick is formed at the bottom and week on top. Monday, Tuesday, sorry, Saturday, Sunday, Monday. I want the week to form the body, and then Friday it will come. This is the lows of the week, right? Maybe come Friday and then come back up and close up. So that's how uh, I am thinking the week to form. So this was on Sunday. Then here comes Monday. Monday, what happened is it came down. It took the sell side. It took all the sell side, went up, right? So this is the wick forming, and now everybody is thinking the market is going to go up. See how it respected the top of this candlestick, right? So I don't want it to go above it, and my stop loss will be somewhere above it. So forget about the stop loss and all. So Monday, this is maybe fifth, right? I don't know what was fifth. Monday, maybe Tuesday. Oh yeah, the Monday the market was closed, but still it traded, right? It took the liquidity, it came up, and now I want it to fall down, right? Start going lower. Tuesday. That's on the 6th. I think so. It's a Wednesday. So what it did is it started going down, and it came right here on the this like when I take it front. I think so. The neck slide is I take this front to show like how it came in this area. Okay, see here you can see this is the gap top, right? It came almost there. So by now you should know like what happens. It is not just going to start falling down or whatever. It's the smart money's engineering liquidity. Over here you can see it took the liquidity, went up. You can see it just went little higher than this level. So what it did do is it took that liquidity. Beautiful. So it took this liquidity, it's engineering liquidity, the smart money took the start did the sell because now once it goes up here, right, everyone is bullish. They're thinking, oh, since Monday was a holiday and Wednesday, like it's going to start going up. What it did is it took the liquidity, started coming down. So this you can see this yellow, this line is Sunday open. So that's my start of the candlestick body, right? And this is the wick part. And then you can see this is a Wednesday. I'm looking at this also as the open. So I'm looking at the weekly candlestick to form, and then I'm also looking at the daily candlestick to form. What happens? It comes down, goes up above the open right here. There's the wick, small wicks forming, and then the body is going to fall all the way down. What happened? It came all the way down and then it closed up. So this is a daily candlestick that's forming, right? Let me show you if I can. So this is the open for, I guess, Wednesday. So the body is going to start forming from here, right? And then the top part is the wick. So the body is forming. Oopsie, I should have drawn this side. Doesn't matter. So the body is forming. Then what happened? It came all the way down here. It's the lows, right? And again came up. So this is the wick that is forming, and it closed here, right? So let's make the body of the candlestick. It closed right here. Yep. So that will be the wick is not right. Yeah. So that's the wick right here, just a little wick, and at the bottom there's a big wick. So all this trading, it came down to the lows and then it went up. So then that's how the bodies form. So I'm also looking for the daily bodies to form to the down, it's like in a red candlestick, right? So this is how Wednesday formed. Wednesday, and then Wednesdays, and this is the gap at the bottom. Then comes Thursday. Thursday, you can see it came all the way to the bottom of the gap. It filled the gap, right? This was all buy side. Now you can see it even did the sell side. So the price is kind of balanced, right? Buy side and then the sell side. So it came all the way down, right? It is, I guess, Thursday. This one is a Thursday. And after Thursday, I don't think so. I'm going to trade because I don't like to trade on Fridays because I know what's going to happen is it might come down and again come and close up to form the weekly candlestick on the side. So this is how it was going on. Let's see if I have more. Yep, there you go. That was Thursday. Okay, so that was Thursday, and then this is Friday. So Friday, Thursday, what happened is came down. On Friday, you can see it went up, but then it closed down. So you can see how the candlestick is formed, right? So that's why I don't like to trade Fridays. And if it was, say, if it would have been middle of the week, right? Then that's why, like, say, this was Friday and I wanted to trade. So that's why I put this at the bottom of this. Like I'm thinking, oh, it might come down, right? But it's not a good idea because it's been falling down. So here you can see what happened is came down, went up, took this liquidity, came to the top of this. Okay, took this liquidity, went up again, took the liquidity for this gap and went up. So this was Friday that I was saying. So Friday I was looking. So this is actually, I'll just show you how I look at the market. This is Asian range from 7 or 8 o'clock from US till 12 o'clock in the morning, right? This is all Asian range that I'll be looking for. So this is going up down market, right? And then here you can see the market broke up. It took this liquidity area, it went up and then came down. So anything else? That's that's it. So that's how the mark. I was looking for the market, and that's how it traded. Let's see. I wanted to show you. Let me go. So, yes, okay. This is Russell 2000. I wanted to show you some trading that this is Don Jones. Okay, this is what I was looking for. So here is, let me show you. So this is how it went this week, right? What I was looking for, the market came all the way down. Friday it closed here. So here I was trying to show you how the candle was formed. So that was the weekly high, weekly open on Sunday. It came all the way to the weekly low and then again went up and closed at this weekly close, right? So this is how the candle is formed. So the starting of the week, I'm looking for the wick to form, and then I'm not going to look like, I'm just let it going to develop as the day goes by. So let me show you. I guess let me. So how the algorithm works. This one I also knew since you trade, so you guys will also know all this, but then I used to not pay attention to it. So this is the algorithm that I look at. So what happens is the top one is going up, down, up, down. So this is called consolidation, right? It's just moving nowhere, up, down, up, down, up, down. So this is a consolidation area. So the market is just going up, down, up, down. That's the first thing is there's the consolidation phrase, right? And then the next phrase is this is expansion when the market keeps on going up, right? It just goes up. This is consolidation. Sorry, the top one is consolidation. This is expansion phrase of the market. So you can say it's like a trending market, right? So that's the expansion. And then this is the upward expansion. This is when it's bearish, right? Downside expansion when the trend is down. The third one, this is first, this is second, and then the third one. Let's see. So you can see this is expansion phase, like when the market is going up. Trending markets, expansion. This is bearish expansion to the downside. So this is expansion. And then the third one is retracement. So it goes expands and then retraces a little, right? So that's this phrase. It expands and just retrace. It doesn't go all the way down. If it goes all the way down, that is reversal. So if it just comes little down and then again it expands to the upside. So this is retracement. So the third one is retracement. You look over here too. It's a bullish. It's just retrace little bit, not all the way up. If it goes all the way up, that is reversal. So the third one, and then the fourth one is reversal. It's going up trend, right? And then let me remove this. So it started from here, it went up expansion, and then it reversed. It took this low, right? So that means it's reverse. The same way for the bearish one, it's going expansion to the downside, and then it takes the highs back, so that is a reversal. So market does this. That's what I observed, right? Everybody observes. I also knew it from before, but I never paid attention to it. So that's an expansion phrase where they accumulate orders or distribute orders, and the consolidation. So when it is in consolidation, it can't do a retracement, right? Because it's in a level area. From consolidation, it always has to expand. That's main thing, right? It always has to expand. It can't consolidate and reverse or retrace, right? It can't do it. From consolidation, it always has to do an expansion. From expansion, it can go into a river. Sorry, yeah, it can go all the way reversal and go all the way on the other side, or it can retrace and then again expand. So this is really nice, but I don't think so. I'm explaining it in a really nice way. Let me remove this. Where is it? So it just it can only after consolidation it can only expand, and then it can even from here then it can go retrace and then again expand, or else it can go completely reversal. So hopefully you at least got a little idea, but I think so I'm not able to explain it, but it's in my head and I think so I'm explaining it really nicely, but I know I'm not. So this is what happens, and let me show you actually last. I think so it's getting too long, but I won't be doing a video for a while now because let me see, where is it? Okay, this is what I wanted to show you. So this is the buy side, right? And then the sell side was this week for uh, Russell 2000. So I want to show you daily how I look and how. Okay, this you can see this bottom one, right? This one the liquidation is taken, liquidity area is taken all the way till here, right? This one is also taken. Let me just remove this stuff. That is my back testing that I was doing. I'll just show you 2-3 days and then I think so I shall close this one, right? So over here you can see what happened is this was the sell side all the way down, came right, and then now say this is just hindsight, right? Now we know it's going to go up. It came, it took, look at this, it took this liquidity and now it's in bullish order flow, right? And it's going to go down. So I'll take you and show you how I do it daily. So this is 1 hour. Let me go into 15 minutes. Okay, yep, let's do it this way. Let's see. Okay, so we are in a bullish order flow, right? You can see the market came all the way up, and over here, let me show you what am I looking for the bullish candlestick. So this is a day's chart right from here, but this is a 15 minutes chart. So what I'm looking at is really fast. I'll just do it really fast. So you can see this red triangle. The red triangle is Asian trading, right? Asian trading range. I wanted to do it. No, forget it. Let's go. So this is Asian range because it's the Asian trading hours, right? So the market went up, down. Is what it's doing. You can see it's consolidating, right? It's consolidating, and then over here you can see at the bottom also it says 00. So that's 12 o'clock. So I'm from here I drew this line. You can see, right? So over here, what happened is if I'm looking for the day to be a bullish day, right? A up day. So like I had shown you the previous one, right? What I'm looking at is this is Asian area range. There are a lot of stops on the top and stops at the bottom. The buy side liquidity, sell side liquidity at the bottom, right? This is going on all this way along, right? What the smart money does is this is 12 o'clock, the algorithm starts. It comes, takes down, takes the buy side, right? Buy side, but then I'm looking for the wick to form, right? So this is the open of the day. You can see this line, right? And then when it comes down, so this move up is taking the liquidity from the Asian trading range, right? They took all this liquidity, sell side liquidity. Now what they're going to do is they're going to engineer the liquidity, and they are going to go to the sell side. They took the buy side, now they came and took the sell side. This is a fake move. Now everybody's thinking, oh, it's going to go to the downside. But when you're looking at like my strategy, when I'm thinking, I know it's going to be a bullish order flow, right? And then this is the wick that has formed at the bottom, and then you can see it started going all the way up. And then for the next day, I'll mark this area, the top of the and the bottom of the trading range, right? So this is the top of the trading range. Oopsie. Yep. And the bottom of the trading range. So then now we are going to move to the next day. This is the top from yesterday, okay? And this is the bottom from the next day. So for the next day, if I am bullish, right, I don't want it to trade to the bottom side of the range. I want it to trade to the top level and then break to the upside, the candlestick, right? So it's going to be a bullish one. So now again here you can see Asian trading range, right? Up down. There is all liquidity area on the top, liquid stops on the top at the bottom. 12 o'clock it opened. What did it do is went, took the sell side, and then came, took the buy side. Look at this. This is a big wick that is forming. Now this is going to be scary because it's like this is all the way down, right? It's going to be scary. But then if I am thinking that it's going to be a bullish order flow, right? Look at it. It comes all the way down and it's go. Look at the move fast. So this is the other day, right? What happened is here, and then the same. I'll take this range from yesterday, and then I'm going to this. Okay. So you get an idea what I am looking for. Like if it's a bullish day, look at this Asian range. It went up, came down all the way. All right, I think so. It's been a long video. I don't think so. You guys will have time to watch it. But that's it. I think so. I won't be doing a video for a long time now. Enjoy it. Bye.